the sectors and stocks that you track, Rima, because we have the management of NetWeb, I think, joining in, the first corporate conversation on the radar. The stock has been gaining in trade following the third quarter print. On an annual basis, the company posted a revenue growth of 42%, but the concern is on margins because the margins have dropped in rather sharply, especially if you do a sequential quarter-on-quarter comparison, now coming in at 13.5%. Let's discuss the outlook and all the triggers at play with Sanjay Lodha, Chairman and Managing Director, NetWeb Technologies. Mr. Lodha, thank you very much for joining in. So just explain this to us. This phenomenal top-line growth of 40% plus, but an equally sharp drop in margins. What explains this, and what can you give us with respect to margins in terms of an outlook?
Yeah, actually, this was a very, very robust quarter for us, wherein basically, if you really see, a year-on-year growth was around 40%, and basically quarter-on-quarter growth was around 75%. As regards margins are concerned, ma'am, actually, really speaking, if you really see the PAT has maintained at 10 to the basically as per our indication. We have always said that basically our margins will be, the gross margins will be in the range of 25 to 26%. Even in the Q1, you saw that the margins were 37%, but still we gave the guidance that it will be the normal margins should be around 25 to 26%. So basically our kind of a company, it's very difficult to basically judge every parameter on quarter basis, particularly the margins, because basically the order nature and the projects and all those things are there. So basically it can be on quarter basis, there can be some variations, which we are not at all worried about. And particularly the guideline which I have given to you, we are very well on track that 25 to 26% of margin of gross, which will maintain. And if you see the other factors which we have seen robust growth. You see the order book.
Sure.
The order book is already around 330 crores. And I am very pleased to announce that basically we got the India's ISRO, the Department of Space, the fastest supercomputer order also. That's around 150 crores. Plus, basically, we also got the PLI incentive, which we had filed last year. So PLI incentive has also come. So that proves that government also pays you money once basically they come out with schemes. So all the positives we have actually, sir. And AI basically, one more point which I'd like to say is, if you see basically we entered into a partnership with NVIDIA, basically wherein we are among the very few manufacturers for them on the Grace Hopper chip, basically for the artificial intelligence. If you really see our business, our volumes on particularly on the AI has really gone around 340% year-on-year growth we have shown, and basically future we are seeing more. So basically all that will take care of the margins, and we are very confident of achieving 25 to 26% year-on-year.
But just one more point. When do your gross margins shoot up to 37%? And when do they come down to 21%, as we've seen in the quarter? What causes this wide fluctuation?
Yeah, actually, basically, we are not box pushers, ma'am. We are primarily, we sell our customers are all high-end government research or basically high-end enterprise customers. So basically different kind of projects have got different kind of basically deliverables, margins, and all those kind of things are there. So that basically inter-quarter, that fluctuation can be there actually. So basically, as from the very beginning, I have been telling you, the company has to be measured on the annualized basis. And basically, if you see that, so that's the reason you are seeing that fluctuation in between the quarter. But basically, as I have mentioned to you again and again, that basically my guidance, I will completely maintain my guidance, which is 25 to 26%, which I have mentioned on the gross, that will be there. On the PAT side, if you really see, we have always indicated you 10.5% to 11% maximum. So we are maintaining that actually.
And what about on the top line? Can you sustain this 40% plus revenue run rate? How is Q4 shaping up? Because your order book is strong at over 330 crore. Your L1 pipeline is also above 300 crores. So can you have a Q4 revenue growth which is above 40%?
No, basically thing is that I will still stick to my guidance of 40%, ma'am, very, very clearly, because if you see basically our kind of business is basically is enterprise segment business, and basically we consider it very mature. So 40% growth, basically the confidence which we are getting, if you see my figures for last 3 years, that will prove that basically we have been maintaining the CAGR of 40%. And this year, initially also, though the Q1, there was a slight dip in the revenue, but I told you that basically please hold on. You will see the improvement in the revenue from Q2 and Q3, which you're already seeing that now. Actually, if you really see, we have surpassed last year's turnover and last year's basically profits in 9 months actually. So basically the company is going robust, and plus basically the order book is also very strong. The L1 pipeline is also very strong. So we are very sure not only about the next quarter, but quarter beyond that also looks very, very bright to us.
You did. A 9-month FY24 revenues this time at 466 crore is higher than your FY23 revenues of 445 crore. Can you give us an indication of this AI revenue? You said it's gone up by 340%. Now, AI revenue and enterprise workstation contributes about 10% to your overall revenues. And on a quarterly basis, the run rate was 25 crore. What can that number increase to? And what was the revenue contribution, particularly from that NVIDIA partnership, which you announced? Out of the 25 crore, how much came because of NVIDIA?
Yeah, basically the AI primarily currently most of the AI is driven by NVIDIA. So NVIDIA has got its role to play in the entire AI revenue. So we used to do somewhere around 6 to 7% earlier, which has really gone up to 10% now. And we feel that this will slowly grow. And in the next year, our target is this will go to 15-16% of our total revenue. That is the kind of outlook which I'd like to give. The Grace Hopper systems, the designing is done, and basically the sample production should be out by March. We are very well on track on that, and there is a huge demand around that. So definitely we are trying to push that manufacturing so that basically we have the products commercially being launched, as I had committed you, by somewhere around by I think May end or June timeframe. So basically we feel that it will really, because our SMT line, which I mentioned to you, will be up and running by basically within 3 to 6 months. So that will be also really help us so as to boost up our production. So definitely all that is completely going as per schedule. And basically we are seeing a huge traction on the AI side as well. And our revenues have already started showing that kind of growth. And we feel that this will keep on growing.
Thank you very much for joining in. That's NetWeb Technology, confident about sustaining a 40% plus revenue growth, gross margins between 25-26%. Profit margin range should be between 10-10.5% maximum, going up to 11%. And they're also saying that NVIDIA partnership is contributing to their AI revenues, and the AI revenue contribution will go up from the current 10% to 15 to 16% next year. We'll get into a break on the other